Saurabh Mukherjea is with us. He's founder at Marcellus Investment Managers. He's joining us on the program. It's been a while, Saurabh. Great to have you with us here. Thank you very much for your time. We speak at a time when we're almost at new high, Saurabh. But I just want your sense on earnings and how the fourth quarter earnings and what you've heard from companies, your portfolio companies and others. What's your sense and feel been like for how F524 is, what we should expect across the board? Go on.
I think by and large, the picture we got of India Inc. Basis fourth quarter was that by and large corporate India is humming at the moment. There are a few spots of weakness. I'll come to that in a minute. But if you look at, say, the banking sector, the top lenders, banks and non-banks are growing at 20-25%. The life insurance sector growing at mid-teens. The IT services sector, whilst the slowdown in the Western world, the close to sort of the brush with recession of the Western world, lowered revenue growth for the IT sector, the deal wins were uniformly strong. So if you look at sort of TCS or Infosys, or indeed the engineering R&D services, one of the best quarters from a deal wins perspective. The capex cycle plays, we don't have too many capex cycle plays in our portfolio, but say if I look at L&T's order wins or Cummins' revenue growth, Siemens' order book, it looks like the capex cycle in India is humming. The only spot of weakness that I could see in the fourth quarter results was discretionary consumption, not small ticket this time. Discretionary consumption seems to have hit a pocket of weakness. I was looking at TTK Prestige's results. I was looking at Jubilant FoodWorks' results in our own portfolio, Page Industries' results. I don't have an easy answer for why discretionary consumption has hit a bit of an air pocket. Is it because job creation in the IT services sector, in the tech sector has slowed down? That's something we'll have to look at in more detail. But leaving that specific aside, by and large, the picture is of a humming economy. And if you consider the fact, Prashant, that this is an economy humming after a year and a half of rate hikes, I think the outlook is extremely positive. Not just in terms of foreign fund flows. I spent 2 weeks in America meeting institutional investors. I think the outlook for foreign fund flows is very buoyant. But even from a macro standpoint, I think we're looking at a pretty healthy FY24, both from GDP growth perspective and from earnings perspective.
Okay, well, I just want to mention that the stock of the moment right now undoubtedly is Mahindra & Mahindra, and a lot of brokerages have raised their earnings estimates and target price on the stock post the numbers. So it's currently at 1338, but on an average, the prices are anywhere between 1500 to 1600. Morgan Stanley's at 1472, Macquarie is at 1546. In terms of target price, Motilal Oswal is at 1500. And the one thing that, I think people are quite positive on is the fact that M&M has raised their capex guidance for the auto segment to 9,500 crores from 7,900 crores earlier, and for the EV business. So, Saurabh, hi, good morning. You were talking about the pickup in the capex cycle. We are seeing companies do that, right, like Mahindra & Mahindra, because they are quite bullish on the entire revival in the auto space. But do you think a lot of that is in the price, especially for some of these names?
I mean, look, we don't own Mahindra, but if I take, say, let's take a straightforward example. Let's take a big Marcellus holding, HDFC Bank. They've been growing their loan book consistently at 22-23% for 20-25 years, Sonia. And if a company consistently grows at 22-23%, both sides of the balance sheet for a quarter of a century, it's difficult to say that the stock price fully factors that in. I think the last 4 years, HDFC Bank would have compounded about 4% share price compounding, in spite of the business compounding consistently at low 20s. So difficult to say that, with India's best franchises, the share price fully reflects the upside. You guys are just discussing ICICI Lombard. We've owned it for the best part of a couple of years. It didn't do much, and then this morning it jumps by 10%. So that's the nature of investing. If you invest in quality names like ICICI Lombard, we've owned it for a fairly long time. You just have to be a little patient and wait for the market to realize that the upside isn't factored in, and then you get value crystallization. I'm sure those people out there who are owning an HDFC Bank type stock, you will get your value realization as well. Quick disclaimer on names like HDFC Bank, ILOM. I own it through Marcellus' portfolios. So do our parents. So do my parents, and so do our 10,000 clients. So just thought I should make that clear.
All right. Hi, Saurabh. Good morning. Good hearing your thoughts as always. Saurabh, I recall in the past you had a view on Balkrishna Industries. Is that part of your portfolio?
No, we don't own it. In my erstwhile avatar as a sell-side broker, we used to cover it. Obviously, very interesting franchise in off-highway tires, but we don't own the name.
All right. No, it's getting a hard knock now, and it's down close to around 8% also. We'll keep that one at the side for the time being. But Divi's Laboratory, the last time you joined us, you said you believe in the franchise. You've kept saying it, you'll have doubled their position, if I remember correctly. What do you do the stock at these levels? I mean, the call has worked out. There are some decisions that don't work out, but this one has worked out well. And the street is reading this margin recovery as a positive. Your view on the stock from these levels?
I think, Nigel, there's a long way to go before I can say the call has worked out. We doubled our position in November, December. So I think Jan of 2022, Jan 2022, it was 2.5% of our portfolio. Now it's close to 7-8% of our flagship portfolio consistent compounders. We also added it to our mid-cap portfolio. We added it to Rising Giants earlier in the year. And our view is relatively straightforward. This company is the world's 5th largest manufacturer of active pharmaceutical ingredients, the largest in India. As is evident from reading the newspapers, there is a big shift globally away from Chinese API. Chinese API is 90% of the global market. There's a shift away from that towards Indian API. In the Indian context, the global majors that we talk to keep highlighting that Divi's is the most credible manufacturer of active pharmaceutical ingredients. And therefore, we felt that when November, December, the stock got needlessly pounded, we thought it was a sort of early Christmas gift, and we have loaded up. We hope to make manifold returns on this in the years to come.
All right. Saurabh, what about Page Industries? That came out with a shocker. Outlook is, well, rather muted.
Yes and no. So we've been expecting this to some extent. We pared back the position somewhat. So if you look at 2022, right, the other undergarment companies got absolutely hammered. So I was looking at the other undergarment companies through the winter. They were down 50, 60, 70% in terms of profits. So to some extent, it was inevitable that Page 2 at some stage would get sucked down by the deflationary forces which have hit the undergarment sector. It's quite bizarre, right? In our country, even undergarments seem to go through a cycle. But that apart, I think what's very encouraging for us is the fact that these guys are going ahead and implementing ARS, auto replenishment system, which obviously reduces the inventory in the system. That's a good thing in the long run. But obviously, when you implement tech, when you implement ARS and you reduce the inventory by a month, it's going to hit you that quarter. So Page's point of view, and we'll need to do more work to validate this, is if you adjust for the fact that they've implemented ARS, sales are broadly flat, which I think is a good outcome, given how badly the rest of the undergarment players were pounded through 2022. And there was clearly over-earning in the franchise courtesy loungewear. As all of us sat at home for 2 years, we clearly bought more shorts and track pants and sweatshirts than we would have otherwise. As you come out of COVID, we buy a few more shirts and come to office. So you're going to see a little bit of that taken away. So in a way, Dr. Lal and Divi's, just think about the Dr. Lal Divi's cycle. This is a little bit of a mini version of that. So you stick to the companies like this, and if the stock comes out meaningfully, we will think about ramping the position up. Great franchise, but I think what's happened in the fourth quarter results was not a particular surprise.
Saurabh, you did mention that you've held ICICI Lombard for some time in your portfolio. So this is, the price reaction is in response to the announcement that ICICI Bank will take its share up. But as a business, do you expect, it's underperformed, right? There were huge expectations for the last so many years. But I guess some of the segments they're exposed to, autos, health, there was COVID. The performance was subpar and the share price suffered. So I want your thoughts on, actually, not just ICICI Lombard, but in life insurance as well, which has, again, not done very much for the last 4 or 5 years. Share price performance. What are your expectations on both?
I think what Bhargav Dasgupta and team have done really, really well over the last decade is they've been very careful about underwriting, right? When prices soften, when rates soften in a sector, when excess capital enters the sector and rates soften, these guys pull back. So it's similar to the sort of capital allocation skill set that Senuday Kotak deploys in Kotak Bank. Think of Bhargav Dasgupta and ILOM team as the capital allocators par excellence in general insurance. When rates soften, they pull back. So their big call over the last 5-6 years has been anything to do with agri and crop. They are not interested in writing, right? And as they have throttled off big time on agri and crop, obviously that part of the portfolio has shrunk. In motor insurance, they remain the market leaders both in terms of profitability and in terms of market share. In motor insurance, they are in a way the pioneer and the Indian equivalent of, say, Warren Buffett's Geico. Their weaker division was health insurance. The insurance regulator made a bunch of regulatory changes last year that's allowed ILON to ramp up the health insurance business, which is now growing at around 30%. If they can catch up with, say, a Bajaj Allianz and say India First Strata in the health insurance sector, if ILON can catch up in the health insurance sector and therefore build two strong businesses. The motor business is already very strong. On the health side, they can catch up. I think we'll end up once again seeing a business with 18-19% ROEs, growing the book at 18-19%, which I think is tremendous going in a general insurance context, right? So good company, very clever underwriting, very smart capital allocation over an extended period of time, deserve a lot of credit for that. And I think the market will gradually give credit courtesy the ICICI Bank's move to ramp up their stake. On life insurance, slightly simpler. In life insurance's case, we've seen LIC consistently lose share. And amongst the private sector insurers, it's really SBI Life and HDFC Life who stood out. SBI Life, a little bit more of a quasi-asset management. HDFC Life is your pure protection play. Again, even under the current management, not just under Amitabh's previous reign, but even under Vibha's reign, our return on embedded value has been in the 18-19% range. They've grown the business at 18-19%. Consistent growth in high teens. I think they dealt with the budgetary setback, the FM announcements in the budget, they dealt with it very well. And I think if you look at private sector life insurers focusing on protection, to our mind, HDFC Life stands out.
Okay, all right. Saurabh, thanks so much for stopping by, filling us in with your take on a whole host of stocks. Wishing you a good day ahead and looking forward to having a chat with you in the near future.